All right, what is up, YouTube? Before we get started, quick note, I'm not a licensed financial advisor. Nothing I say here should be taken as professional advice. The stocks I do mention, they're all based on my own research and analysis, okay? I'm sharing them here literally for educational and informational purposes. So always do your own homework, check the numbers yourself, and never invest more than you can afford to lose. So maybe you got a little extra cash sitting aside, or maybe you're just curious where the next big growth story might come from. Today I want to talk about Rivian, ticker symbol RIVN. Rivian here isn't just another electric car company. They're building trucks, SUVs, and delivery vans, but more than that, they're building an entire ecosystem, charging infrastructure, EV insurance, and even software. Now, this isn't just about selling cars, right? It's about building a platform, kind of like how Apple didn't just sell phones. They built an entire ecosystem around the iPhone. Now let's rewind a bit. Rivian was founded in 2009 in California. For years they flew under the radar, right? Quietly building technology and raising money. But here's where things get interesting. Before they went public, right, they raised over $10 billion in private financing. Who were the backers? They weren't just random venture capital firms we're talking about here. We're talking heavyweights. Companies like Amazon, Ford, Volkswagen, and yes, even T. Rowe Price. And if you don't know T. Rowe Price, right, it isn't some guy in a suit. It's a massive investment management firm, right, overseeing more than $1 trillion in assets. Now, when a firm like that places a bet on a company, it's not a casual decision, right? They're basically saying, hey, yeah, we see long-term potential here, and we're willing to lend you guys a lot of money so that, we get a good return. Now, Amazon's stake is really huge too, right? They've already committed to buying 100,000 electric delivery vans from Rivian. That's like, imagine literally being a young company and landing Amazon as your customer. That's like starting a sneaker brand and then immediately getting, the NBA to wear your shoes. Things like that don't just happen, right? Unless there's something behind the curtains or big players want this company to succeed. Now, if we fast forward to 2021, Rivian does go public in one of the biggest IPOs of the decade, right? At its peak, Rivian's market cap soared past $100 billion. Now that's bigger than Ford and GM that time, right? Think about that. A company that had barely delivered any cars was suddenly valued more than, century-old automakers. Of course, reality eventually set in and the stock's been hammered since then, coming way down, but that's what makes it interesting now. It's undervalued as I see it, right? Or is it just plain risky? So if we do some fundamental analysis and we hop over to the balance sheet, we look at the numbers, obviously, because this is where things get real, right? As of December 31st, 2024, Rivian had about 15 billion in assets. That's like their toolbox, right? Cash, inventory, factories. And out of that, a massive 5.2 billion is in pure cash. Now, imagine losing money every year, but still having billions in the bank. It's like having a fat savings account while your paycheck is still negative. This is great because it buys you time. On the other side, if we look at the liabilities, what they owe, that sits at about 8.8 billion, and about half of that is short term. Okay, that's due within a year, but nearly 8 billion in a long-term debt. Now, this obviously can be good fuel for growth, but it's also a lot of pressure. Cool thing is they're also backed by the U.S. government. Now after subtracting all that, Rivian's equities at about 6.5 billion. That's basically the shareholders' piece of the pie, what's left over for people like us, who own the stock. So basically what the balance sheet says here is, Rivian's got a lot of cash, they got assets, and they got strong backers. Now they're not on the brink of collapse, but they do need to figure out a way to become profitable sooner rather than later. And I don't see a problem with that. I think it will happen. It's usually the case here with, early stage growth companies. But if we look at their income statement, this is the story of their earnings. We can see that revenue in 2022 pulled in about 1.6 billion. In 2023, that exploded to about 4 billion, and by 2024, it was sitting at about 5 billion. Now, that's like going from a local bakery to a national chain overnight. But here's the thing with the growth, it did slow down, between 2023 and 2024, and that's all right. Gross profit, this is where things get interesting. Also in 2022 they did lose about 3 billion, and by 2023 that did shrink to about 2 billion, and by 2024 it shrunk to 1 billion. Still negative, but they are improving every single year, and that means they're losing less per vehicle sold, and that's good. We want to see that. Now, operating expenses, right? This is like research and development, salaries, marketing. That stayed steady around 3 to 3.7 billion. Overall, The net loss in 2022, they did burn about 6.7 billion. In 2023 was about 5 billion and 4 billion in 2024. Again, they are still bleeding, but the bleeding is slowing down. And the way you have to think of it is like, running a marathon, right? While carrying a backpack full of bricks each year, but slowly they're pulling bricks out, and they're not done yet, but it's progress, right? Eventually there's going to be no bricks in the backpack, and it's going to be a beautiful sight. Now, if we zoom out a bit, why do investors even bother with companies that are losing billions, right? Simple. Growth companies, they often burn a lot of cash before they make it big, right? Tesla lost money for over a decade before churning a profit. Amazon was laughed at in the 90s for losing money year after year, and look how that turned out. With Rivian, the bet is this, right? Can they survive long enough, scale fast enough, and build a brand loyalty strong enough to become the next Tesla, or at least, a major EV player? And I think they can. They have amazing cars. They all look good. The EV market itself is growing like crazy. Governments are pushing, green policies. Consumers are shifting away from gas, and infrastructure is expanding, right? It's not about today, it's about 5, 10, 15 years from now. So closing thoughts, here's where we land. Rivian, has billions in the bank. Heavy hitters like Amazon and T. Rowe Price in their corner, and a growing product lineup. On the flip side, they're still losing money and need to scale a little bit faster. The balance sheet says we've got a lot of cash and a lot of backing, right? The income statement says, yeah, but we're still losing money. The bigger question for you as an investor, for me, is do you see this as an early entry point to a future giant, right? Or is it just a money pit that, might never get out of the red? High risk, high reward, that's Rivian. Is it a future Tesla or a future Nikola, right? And that is for you to decide. Me, I do think it's a future Tesla here. So I am investing. Right now is a good time to get in. It's trading at $13 per share. But if you found this video helpful, the breakdown helpful, drop a comment, drop a like, hit subscribe, and let me know what your comments are. Do you think Rivian is undervalued right now, or is it just too risky? And is there another, maybe there's another stock you want me to dig into? Let me know. And thanks for watching. And I'll see you guys on the next one.